Hello guys, good afternoon. Um, Market just closed, so I decided to record this market review today right away. Today's date is October 15. We had a reversal profile during the New York session. Market basically dumped a lot. So the low of the day is almost 400 points, and the sell side was 336 points. So right now I'm looking at Nasdaq on the 4 hourly chart just because this was a 4 hourly distribution essentially, and market seems like it's getting into the market maker sell profile, targeting. So it targeted the first equal lows. Now we have these equal lows. It should, in my opinion, take those lows as well from here, but we'll see. We'll go step by step. So here, what we observed today was essentially, or this week, it actually includes yesterday as well, is essentially market build up liquidity, equal highs, build up sell side, equal lows. It ran on one side and repriced to the other side. Basically, the first side ends up in this kind of profile as manipulation. It aggressively repriced all the way down to the equal lows and completed the sell model over there. So, that being said, let me annotate this as H4. Actually, you know what? I'm going to switch to the delivery contract anyways because I have annotations here. I'm going to read through this instead. Okay. Now it seems a lot here, but I promise I make it as clean as possible. So, during the pre-market, it made a low here, ran buy stops, essentially targeted these equal highs here, cleared it all, another buy side right there. Along the way, it left these clean lows, and yesterday's open range gap, which is here. Let me go on RTH. It was never traded into, so today it closed it all. That's another confluence for shorts. Here, during market open or at market open, market formed a low at range gap low, basically open range gap low, and then it wicked above these highs here. Now we have this wick here and the sell side wick and the buy side wick. So the market manipulated all the way down to 50% of the sell side wick and then rallied 50% of the buy side wick here. I'm sorry, actually it's 75% of the buy side wick and the 75% of the sell side wick. It left equal highs, but along the way it actually cleared this accumulations, both sell side and buy side. This is a double purge. It run on sell stops first, buy stops second, and then distribution. So here it went up all the way to the 75% of the buy side wick. I technically wanted to see engagement there, but it didn't, and immediately after it engulfed the previous candle, which is now an order block. You see me annotated the mean threshold of the order block, which was respected, and this is the open price of the bearish order block. So it made a low here, went all the way up to the mean threshold of these the bearish OB, but also not only that, how could you know possibly this is I've seen this later. I didn't see it during the live stream, which is it's what it is. The reason is, first of all, this candle doesn't have a manipulation. That's the first reason, and the second reason is this gap here, the volume bounce. It basically manipulated one more time into the order block mean threshold, and this gap body is respected, and it delivered displaced lower. So here, displacement out to the mean threshold, retest of the bearish OB, sell side down close candles, retest of the first fair value gap of the New York session, down close candles, retest of the opening range gap high. Now it led into the first displacement. Then it retested the opening range gap CE, immediately rejected, and formed another fair value gap there, and took and cleared the sell side here, which is essentially equal lows. And then after engaging with the sell side, it gave an up close candle, formed the fair value gap initially. This was not a breakaway gap initially, but the candle after this one right here, once it moves away from the up close candle, now you would expect this to become a breakaway gap for weakness, and this is when I mentioned price is weak. Okay, the ortho was weak. So here, immediate rebalance into the bearish OB, displace one more time. This displacement IFED, price stayed below the CE of that SIBI, indicating still weakness, and it completed the sell model on the lower time frame, delivered the sell side, and chopped its way around the sell side, which is essentially NDOG also. I'm sorry, NWOG. I think, hold on, my bad, that's not NWOG. I think it's NDOG, I think. Nah, okay, never mind. So here, price came all the way up to this Wix CE, formed an order block there. Here's a bearish OB. Once it moves away from that up close candle like this, or like this, or like this, that confirms the OB. Before that, you can anticipate it, but it's technically not an OB. So this is the order block open price. This is the mean threshold of the same order block, Wix CE. So it came down to Monday's open range gap high, pumped a little bit. This is basically a manipulation on the 5-minute. Went all the way up to the mean threshold of the OB, and this placed lower. Now we are inside the Monday's opening range gap. First displacement, second displacement, third displacement, and here same deal. The latest displacement below the opening range gap CE of Monday. IFE'd it into the SIBI, sold off right away. Displacement. It essentially closed the Monday's opening range gap completely with this displacement here. And this is all indicating weakness though. That's the most important part. Like breakaway gap, first indication. This staying below CE of the SIBI, second indication. Here the same deal, staying below the CE and moves away right away. It's not spending time, indicating weakness. Okay, 3 times this happened, so it indicates weakness. In that case, on days like this, you should not be looking for reversal trades. Okay, go with the trend, don't go with the counter trend. You will hurt yourself. You'll think, oh, it left equal highs, it's gonna take it. It doesn't have to, because the price is weak. These areas will be left for later, which is what happens. Same deal here. Okay, the price kept its bearish order flow the whole day. So here it closed the Monday's opening range gap, came all the way down to the 4-hourly lows, but it moved away immediately, fell short 20-30 points here, and formed a bullish order block there. Bullish order block was used to reprice market to quote-unquote premium, although it's not a premium. It's basically going for this wick, using that as a fair value gap essentially, but it displaced to the downside right away, which is indicating the high set. Used the SIBI to reprice the short-term sell side, and pumped from here from the same OB redelivery. Tried to reach to the buy side liquidity. It failed there. Once it displaces, here's the displacement. Once it displaces, that means it failed, and the likelihood of that not getting engaged with the buy side is more likely. And also the CE of this buy side was the area that got rejected, which indicates market is building up liquidity here. You should not be targeting this until it engages with the sell side at least. Okay, so displacement, retest of that displacement, delivered the sell side here, and basically trapped here some shorts, moved away from that level after seeking the short-term sell side here. Displacement to the upside, basically went for turtle soups here in premium. Turtle soup this high, stayed below the CE, then manipulated below equal lows here, and second stage completed on the 1 minute once this buy side here is engaged. And you can see the weakness at that buy side, which is indicating market is getting into market maker sell model on the lower time frame, in this case 1 minute time frame. It formed an SMT above the buy side of the second leg target, which is this high here. This dump is just a manipulation below to clear the equal low so that it could reprice the asset above its target, which is the second leg's high. So SMT divergence, first displacement right here, that went lower, formed the order block here within the CE of this wick here, moved away right away and confirmed the order block. Now that's a confirmation to go short here. This is the order block, and if you go short there, you have to respect the order block. So the stop loss will be above, let's say you shorted this fair value gap here, right? Has to be above this high here. You need to respect the fair value gap and the order block. So it's in market maker sell model, sell side being down here. The order block, so this becomes a breakaway gap. Let's make it red because of the OB. It chops its way around here. Turtle soup the equal highs here, relatively equal highs. Turtle soup the high, redelivered bearish OB, displaced immediately. Here's a displacement. You can also use this as an OB as well in that order flow, and then eventually it collapsed and completed the market maker sell model on the lower time frame, which is, let's say you entered in this fair value gap all the way down here, 46 points, and your risk is 12 points, so it's basically like 5R ish. Great trade. Tagged the low, and it didn't go lower. There's a reason for that. It is, I mentioned this in general chat actually. So it is a 4-hourly display. It is a 4-hourly distribution, right? The price is attacking the 4-hourly lows, which means the likelihood of 10 a.m. 4-hourly candle engaging with the liquidity is lower than 2 p.m. engaging with it. So what it does there is it just manipulating below the south side, leaving this one here. So it's taking the internal, forming new equal lows so that it can run on it with speed, so that it can go for the 4-hourly lows once the following candle opens, which is what? It is 2 p.m. candle, right? So you should be waiting for 2 p.m. candle there. Let's clean the chart a little bit once this trade is completed. So here I'll annotate what I mean by that. So price rejected this level after Purgeon buy side, displaced higher, and this is 2 p.m. open. This candle right here. This is 2 p.m. open. So anytime price trades above it, you should be looking for short setups above its open price, and you should be targeting 20,301 because it's likely to raid that low on the 4-hourly within the new 4-hourly candle, if that makes sense. If this sounds complicated, please tell me like, hey bro, that was too complicated. Can you explain what you mean by that? I'm more than willing to explain it. So here's the 4-hourly open manipulation, basically AMD 4-hourly opened, manipulation above, so it spends time here. There are several displacements within the premium portion of that candle, which is the buy side wick. So this is the displacement, and then this is the order block mean threshold. This is the order block bearish OB inside the premium portion of the 4-hourly candle. This is the displacement. So it used all these PD arrays above 4-hourly candle open to reprice during the PM session down below the 4-hourly equal lows, and the internal lows also here from the morning session equal lows. And the most important thing is here, look at these equal lows, okay? This low and this low. Once it gets down there, it doesn't fuck around. It's not like wicking. It just goes for it right away. Displaces and tags the actual draw on liquidity, which is 20,301. So clean day. Definitely did not expect this kind of dump today. I was low key anticipating 20,301 yesterday. When I was talking to Fabio, but I didn't expect it to come today. I'm not gonna lie. Just due to the fact that there's no news and all that, but it's what it is. Clean day. I'm not gonna lie. Besides the opening range area here, the rest is clean. Here is clean, and this market maker sell model on the 1 minute is clean, and the 2 p.m. open, high, low, and close is also clean, and the rest of the session was just basically price getting ready for close, target at the equal lows, displacement to the upside, fair value gap retest, sell side sweep inside the fair value gap, and it went for some buy side here. So hope you guys find this insightful. I'll talk to you tomorrow, guys. It was not a good session for me, unfortunately, but risk was managed, all good. I hope you all stayed safe as well. I hope you did not chase it or FOMO it or counter trend this. These days are not there to counter trend. You shouldn't be anticipating long setups, but instead you should be anticipating price moving to or rating some buy side. Once it does that, you should be thinking about going short above old buy side or old highs. Okay. If you don't do that, you're gonna learn it hard way. Either way, along your journey, like I did, I learned it from the hard way. I used to trade counter trend, reversal trades during this kind of market, and obviously it doesn't work. So, yeah. Anyways, I hope you find this insightful, guys. I'll talk to you later. Have a great day.